Ever wondered how your life could change if you make the right cryptocurrency investment today? Well, you're not alone. With the world becoming more digitalized, the allure of cryptocurrency, particularly Bitcoin, is becoming increasingly hard to ignore. This digital gold has been on a roller coaster ride since its inception, but recent developments indicate a promising future. The cryptocurrency industry has seen highs and lows, and Bitcoin has been at the heart of it all. From the collapse of the Terra blockchain ecosystem to the approval of Bitcoin ETFs, Bitcoin has weathered the storm and emerged stronger. Now, two potential tailwinds have caught investors' attention: the pending approval of spot Bitcoin exchange-traded funds and the reduction in Bitcoin mining rewards later this year. These factors could significantly increase demand and drive the price of Bitcoin higher, potentially changing the lives of many investors. Stay tuned as we delve into the two major factors that could potentially skyrocket Bitcoin's value in the near future. To appreciate the potential growth of Bitcoin, we need to understand its current market status. The past couple of years have seen the cryptocurrency industry caught in a whirlwind of events. A wave of recession fears in late 2021 sparked a shift away from risk assets, particularly in the cryptocurrency market. The subsequent collapse of the Terra blockchain ecosystem triggered a domino effect of bankruptcies and forced liquidations, dragging the market further into the abyss. The fallout was catastrophic, with the market losing over $2 trillion in value. But amidst this chaos, Bitcoin emerged as the phoenix from the ashes, breathing new life into the cryptocurrency market. This revival can be attributed to two key factors that caught the eye of investors worldwide: the looming approval of spot Bitcoin exchange-traded funds, or ETFs, and an impending reduction in Bitcoin mining rewards. The first of these catalysts has already materialized. Just this past Wednesday, the U.S. Securities and Exchange Commission gave the green light to 11 spot Bitcoin ETF applications. This included proposals from two of the world's largest asset managers, BlackRock and Fidelity. This development could spark a surge of interest from both retail and institutional investors, with the potential to drive up Bitcoin's demand and subsequently its price. Some Wall Street analysts are even predicting that Bitcoin could triple or quadruple in value by 2025. One particularly bold prediction suggests a tenfold increase over the next 5 years. However, it's important to remember that Bitcoin's price is largely dependent on demand. This is because the total supply of Bitcoin is capped at 21 million coins, with approximately 19.6 million coins already in existence. Therefore, if the accessibility offered by spot Bitcoin ETFs indeed leads to an increased demand, we could see a significant upward movement in Bitcoin's value. Now that we have a sense of Bitcoin's resilience, let's explore the catalysts that could further boost its value. The first catalyst that could drive Bitcoin's price up is the approval of spot Bitcoin ETFs. Spot Bitcoin ETFs, or exchange-traded funds, are financial instruments that allow investors to gain exposure to Bitcoin without having to buy the cryptocurrency directly. These ETFs track the price of Bitcoin, providing a streamlined and accessible way for investors to get a piece of the Bitcoin action. This is a game changer in the world of cryptocurrency investments. Prior to this, the U.S. Securities and Exchange Commission, or the SEC, had only approved Bitcoin futures ETFs. These are slightly different as they invest in futures contracts rather than the cryptocurrency itself, leading to a divergence in how these ETFs track the price of Bitcoin. But with the approval of spot Bitcoin ETFs, we're looking at a direct investment in Bitcoin, giving these ETFs the ability to closely mirror the cryptocurrency's price. This is a significant development that could attract a wave of interest from both retail and institutional investors. Picture this. Instead of navigating the complexities of cryptocurrency exchanges and blockchain wallets, investors can simply buy shares of a spot Bitcoin ETF through their existing brokerage accounts. It's this ease of access, this removal of barriers, that could potentially boost Bitcoin's demand. Now let's talk economics. Bitcoin's price is determined by supply and demand. However, Bitcoin's total supply is capped at 21 million coins, of which around 19.6 million have already been created. This makes demand the variable of consequence. If the accessibility offered by spot Bitcoin ETFs translates into increased demand, we could see a dramatic rise in Bitcoin's price. Moreover, the approval of spot Bitcoin ETFs could legitimize Bitcoin in the eyes of skeptics, further driving demand. After all, the SEC's approval carries a certain level of credibility, and this could encourage more people and institutions to jump into the Bitcoin bandwagon. In conclusion, the approval of spot Bitcoin ETFs could be a watershed moment for Bitcoin. It's a development that has the potential to attract a broader base of investors, boost demand, and consequently drive up the price of Bitcoin. With the approval of spot Bitcoin ETFs, Bitcoin's accessibility is significantly increased, setting the stage for a potential surge in demand. The second catalyst that could send Bitcoin soaring is the upcoming reduction in Bitcoin mining rewards. To grasp this concept, let's first understand what Bitcoin mining rewards are. In a nutshell, these are the rewards given to miners for validating transactions and adding them to the Bitcoin blockchain. This reward is currently set at 6.25 Bitcoins per block and is halved approximately every 4 years in an event known as the halvening. This process ensures that the total supply of Bitcoin, capped at 21 million, is released slowly over time. Now, how does this reduction in mining rewards impact Bitcoin's value? Well, the answer lies in the basic principles of supply and demand. When the reward for mining is reduced, it means fewer new Bitcoins are being introduced into the market. This can result in decreased selling pressure as miners have fewer Bitcoins to sell. This is particularly significant considering that miners often sell their rewards to cover operational costs like electricity and hardware. With fewer Bitcoins being mined and potentially sold, the supply of Bitcoin on the market could decrease. And remember, Bitcoin's total supply is fixed. So, when the supply decreases and demand remains constant or increases, the price can potentially go up. This is all thanks to the law of supply and demand, a fundamental principle in economics that applies just as much in the world of cryptocurrency. This upcoming reduction in Bitcoin mining rewards has caught the attention of investors worldwide. It's seen as a potential tailwind that could drive Bitcoin's value higher. And while the world of cryptocurrency is undoubtedly volatile and unpredictable, this event represents a clear, scheduled change that could have a real impact on Bitcoin's value. So, as we approach this next halvening, it's worth keeping an eye on the potential effects on Bitcoin's value, because if history is any guide, this reduction in mining rewards could lead to a significant surge in Bitcoin's price. With less selling pressure due to decreased mining rewards, Bitcoin's value has the potential to increase significantly. What do these catalysts mean for Bitcoin's future? As we delve into the depths of Bitcoin's potential future growth, we find ourselves at the intersection of analysis and speculation. These two catalysts, the approval of spot Bitcoin ETFs and the reduction in Bitcoin mining rewards, are expected to have a significant impact on Bitcoin's trajectory. Wall Street analysts, notorious for their meticulous and calculated predictions, have made some exciting forecasts. Some of them anticipate Bitcoin's value to triple or even quadruple by the year 2025. That's an incredible leap, considering Bitcoin's already impressive performance in the past decade. But hold on to your hats, because the predictions get even more thrilling. Another analyst, looking beyond just the next couple of years, believes that Bitcoin could see a tenfold increase in value in the next 5 years. That's a 1,000% increase by the year 2029. Now that's a prediction that could stir up some serious excitement in the cryptocurrency world. But why such optimistic predictions? The key lies in the unique aspects of Bitcoin. Its supply is capped at 21 million coins, and around 19.6 million have already been created. With a fixed supply, any increase in demand directly influences the price. And with the approval of spot Bitcoin ETFs and the expected reduction in mining rewards, that demand is set to rise. These predictions, of course, come with the usual caveats. The world of cryptocurrency is volatile and unpredictable, but the potential is undeniable. The Bitcoin wave, driven by these catalysts, could very well carry the cryptocurrency to new, unprecedented heights. So as we navigate the turbulent waters of cryptocurrency investment, these predictions provide a beacon of potential. A glimpse into a future where Bitcoin continues to dominate, innovate, and appreciate in value. The future of Bitcoin seems promising, with potential growth that could revolutionize cryptocurrency investments. Investing in Bitcoin could potentially yield high returns in the coming years. This is a statement we've reiterated throughout this discussion, and for good reason. The recent approval of spot Bitcoin ETFs is a game changer, paving the way for both retail and institutional investors to easily access this digital asset. Furthermore, the upcoming reduction in Bitcoin mining rewards could alleviate selling pressure, bolstering Bitcoin's price. Predictions from Wall Street analysts suggest a possible 3- to 4-fold value increase by 2025, with an even more audacious forecast of a tenfold increase within the next 5 years. These projections paint an enticing picture for potential investors, but as with any financial endeavor, it's paramount to conduct thorough research, understand the risks involved, and perhaps seek advice from financial professionals. Remember, the future of Bitcoin looks bright, but as with any investment, it's crucial to do your homework first. Happy investing!